This is Trade Alive with IUX, where markets come alive and trading gets real. Let's go live.
This podcast is brought to you by IUX Trading Platform, elevating your trading experience.
Imagine a track record for a moment. 30 years, 30% average annual returns, and the most incredible stat of all, over those 3 decades, 0 losing years. Numbers like these aren't luck. They aren't an accident. They are the work of a man often called the greatest money-making machine in Wall Street history. His name is Stanley Druckenmiller. The core question is, how did he achieve the impossible? He doesn't predict the future. He isn't immune to mistakes. In fact, he gets things wrong more often than you'd think. But his secret weapon is this. He is the master of changing his mind faster than anyone else when the market proves him wrong. Welcome to Trader's Journey, a part of Trade Alive, brought to you by IUX Education. As we step into a new year, a time for new beginnings, there is no better mentor to learn from than this man. The man who lives by the philosophy, strong opinions, weakly held. It means having conviction and being aggressive, but holding your views loosely, ready to drop them the instant the facts change. Today, we decode his playbook. How did Druckenmiller use this mindset to survive historic crashes and build a fortune? And why is the art of unlearning the most critical skill for your trading year ahead? If you're ready, let's begin the journey. Stanley Druckenmiller's path to wealth did not begin on a glamorous Wall Street trading floor. It started with disappointment in a classroom and a hunger for the real world. Let's go back to his early days. Druckenmiller was a young man from Richmond, Virginia. Sharp and ambitious, he graduated with a degree in economics from Bowdoin College. Driven by his love of numbers, he enrolled in a PhD program at the University of Michigan, imagining a future as a respected academic economist. But then came the first turning point of his life. Inside the PhD program, he found that modern economics was filled with complex mathematical formulas, but completely detached from business reality. He was bored by theories on paper. He wanted action. He wanted real results. So he made a bold move. He dropped out of the PhD program, left his academic dreams behind, and went looking for a job. In 1977, he landed a role at Pittsburgh National Bank. His position was a humble management trainee. His starting salary was modest, but what he lacked in experience, he made up for it with obsession and hyper-competitiveness. Druckenmiller didn't just do his job. He dug into data, analyzed stocks, and wrote reports with an intensity no one else could match. This dedication led to something almost unheard of in the corporate world. Within just 1 year, he leaped from a trainee to the head of equity research, leading the entire analysis team at a remarkably young age. But this rapid rise led him to the most important lesson of his life, a lesson in the art of unlearning. One day, he went to present a trade idea to his mentor at the bank, a man named Spiro Strells. Druckenmiller confidently analyzed a chemical sector stock using all the theories he learned in college. He told his boss, "The company's earnings are down. The fundamentals look bad. We need to sell." But his boss simply replied, "Buy it." Druckenmiller was confused. He asked why we should buy when earnings are dropping. The answer he received that day transformed him into a legendary trader. His boss said, "Stan, forget what you learned in university. Earnings don't move the overall market. Liquidity does. When the central bank pumps money into the system, stocks will rise, no matter how bad the earnings are. And when they pull money out, stocks will fall, no matter how good the earnings are. Stop looking only at balance sheets. Start looking at money flow and the Federal Reserve." That moment was a revelation for Druckenmiller. He realized that his old knowledge was actually blinding him from the truth. From that day on, he stopped looking just at individual stocks and started focusing on macroeconomics. This was the birth of his trading philosophy, the willingness to throw away old textbooks and adapt to the new reality of the market. And it was this very skill that would save his life in the terrifying crisis that was about to strike just a few years later. Fast forward to the year 1987, the year financial history was written with the event known as Black Monday. Before the storm hit, Stanley Druckenmiller was not in a safe position at all. In fact, the irony is that on the Friday before the crash, Druckenmiller decided to flip his entire portfolio from short to long. Why did he do that? At that moment, he had immense faith in technical analysis. He saw that the index was hitting a major support level, and prices were bouncing. He thought the correction was over, and the market was ready to soar. So he bought in aggressively, full of confidence. But then came the morning of October 19th, 1987. A brutal reality hit him squarely in the face. The moment the market opened, the support level he thought was unbreakable was shattered instantly. Stock prices were free-falling with no sign of stopping. It wasn't just a decline. It was the most violent crash in history. Inside the trading room, filled with shouting and chaos, Druckenmiller sat staring at his screens, filled with tension. His portfolio was bleeding money, and the losses were mounting every second. In a crisis like this, the voice inside most traders' heads would scream, "Wait for the bounce. Don't sell yet. Ideally, the price will come back." That is the voice of ego, refusing to accept a mistake. But for Druckenmiller, the voice in his head worked differently. He remembered the lesson on liquidity and the reality right in front of him. The support was broken. His hypothesis was wrong. The market was screaming at him, saying, "Stan, you are wrong." This was the ultimate test of character. He had to choose between saving his face, believing his analysis was right, or saving his capital to survive another day. And in that split second, he had to make the most painful decision of his life. The moment the key support level was breached, Druckenmiller didn't sit there crying or praying for the price to bounce back. He did what 99% of traders cannot do. He picked up the phone and shouted the most decisive command: "Sell everything, right now." But he didn't stop there. The moment he cleared his losing long positions, he saw a new reality. The market was collapsing and nothing was going to stop it. His old logic for buying was dead. So he executed what is called the flip. He ordered a massive short position, switching from a man losing money on a rise to a man profiting from the crash, all within less than an hour. Imagine this. In the morning, you believe with all your heart the market will go up. By late morning, you do a complete 180-degree turn, believing it will crash. Average people might see this as being indecisive, but for Druckenmiller, this is the ultimate discipline. It is the act of throwing your ego into the trash and bowing down to the truth of the market. He didn't care what he thought an hour ago. He didn't care about admitting he was wrong. He only cared about one thing. Where is the market going right now? And he had to be on the right side of it. That rapid decision, that complete lack of emotional attachment, was the dividing line between a trader who goes bankrupt and a legend who survives. When the dust settled from Black Monday, the results spoke for themselves. On that day, the Dow Jones Industrial Average fell by 22% in a single session. Countless funds went bankrupt. Retail investors were wiped out, leaving the market forever. But for Stanley Druckenmiller, thanks to that last-minute decision to flip his position, he didn't just survive. He made a fortune on the very day the rest of the world was bleeding. The year 1987, which should have been a disaster, turned out to be a profitable year, keeping his record of 0 losing years intact. This masterpiece of a trade caught the attention of the most powerful man in finance, George Soros. Soros was so impressed by Druckenmiller's flexibility and courage that he recruited him to help manage the legendary Quantum Fund shortly after. This event teaches us a crucial truth. Trading success isn't measured when the market is calm. It is measured during a crisis. And it is defined by who can accept the truth and adapt the fastest. From the chaos of 1987, Druckenmiller distilled his experience into ironclad rules and a trading philosophy that lasted 30 years. Today, we have summarized those core principles into 3 key lessons for you to use as your compass for the trading year ahead. From over 30 years of Stanley Druckenmiller's experience, we can distill his wisdom into a playbook on learning, consisting of 3 key lessons. Lesson number 1. Strong opinions, weakly held. This is the most critical mindset for the new year. To be a great trader, you must do your homework and have conviction in your plan. But at the same time, you must never fall in love with your own ideas, just like Druckenmiller flipped from long to short instantly in 1987. Remember, the market is always right. If your position is bleeding and the chart says you are wrong, do not look for reasons to support your ego. Accept the reality and adjust immediately. Mental flexibility is your best defense. Lesson number 2. Liquidity is king. Druckenmiller always emphasizes that asset prices are not driven by good or bad news headlines. They are driven by monetary policy and central bank liquidity. In the coming year, don't just look at past earnings or lagging economic data. Watch where the money is flowing. Is the central bank pumping money in or pulling it out? Because fund flow is the giant wave that will carry the price in that direction. Lesson number 3. The courage to size up. Druckenmiller learned this directly from George Soros. Soros taught him that being right or wrong is not the most important thing. What matters is how much money do you make when you are right and how much do you lose when you are wrong. Many traders analyze correctly, but they are too afraid to commit or they position too small, so their portfolio never truly grows. Druckenmiller teaches that when you see a clear opportunity with low risk, you must have the courage to increase your position sizing significantly to ensure that the profit from that high conviction trade can truly impact your wealth. But let me be clear, this is not about reckless speculation or blind hope. It is about intelligent capital allocation when a golden opportunity is right in front of you. As we close this episode, I want to leave you with one final thought for the new year. Great trading is not measured by how well you predict the future. It is measured by how well you accept the truth and adapt to the present. This year, I wish you the courage to let go of old mistakes. Drop the ego that is holding your portfolio back and fall in love with the reality of the market, just like Stanley Druckenmiller. Because in the world of investing, it is not the strongest or the smartest who survive. It is the ones who are most adaptable. Remember, stay disciplined, stay aware, and keep learning. If you enjoyed this story, please subscribe and hit the notification bell for Trader's Journey and IUX, so you never miss a lesson from the legends of the financial world. Happy New Year and good luck with your trading. See you in the next episode. Goodbye.
You've been listening to Trade Alive with IUX. Ready to put these insights into action? IUX is here to power your next winning trade.